Black folks, get on top of your tech. Get on top of your tech and your business, black people. Falling behind. All right, here we go. This is how I go. You're going to catch on. This is the intro to the stock market. I just want to see what you know. That's all it is. What do you know? Let's just take a poll. What would you say your level of understanding about investing is? You know, do you hit the triangle, the circle, the diamond, or the square? You feel very confident, unconfident, not sure, need more training. Hit one, hit it before the time runs out. Okay, that's all. It's just a poll, just a warm up. Now you know how it works. Let's see what you know. Owners of blank can vote for the board of directors on issues that come up in annual meetings. What do you know? Owners of what kind of stock? And Karen and Mona, if you can't play, put it in the chat. Put your answers in the chat. Okay. Owners of common stock. And don't be mad if you didn't know, because you learn it right now. Look, if you are common stock, which if you're going to buy stock, you're probably going to be a common stockholder. What that means is that you can vote for the board of directors and other issues that come up at the annual meeting. I literally just got an email. I own some Spotify stock, a little bit of Spotify stock. They sent me an email. The board meeting is coming up. Mr. Stewart, you get a vote. Here are all the items. It came in an email. I didn't read it. You know, it ain't, I know that I recognize that my little one share don't really move nothing, right? Okay, all right, cool. But I do get a vote. I do get a vote. And if you are a common stockholder, you get a vote. If you own preferred stock, what that means is your stock pays a dividend. Not all stocks pay dividends. Your stock will pay a dividend. Your stock will pay a dividend. What's a dividend, Mr. Stewart? A piece of the profits. A piece of the profits. How often do I get paid, Mr. Stewart? Probably quarterly, every 3 months, because the business year is divided up into 4 quarters. Every 3 months is a quarter. Well, how much am I get paid? A small percentage of the share price, 2%, 3%, half a percent. It depends. They set that percentage at the previous year's board meeting. It's going down tonight, y'all. Y'all, I'm bringing the goods. I'm bringing the goods. Let me open this window because it's about to get hot here. Let's go to the next question. Y'all get in on this. How do you get in on this? You go to Kahoot.it on your phone or on another window on your device. Type in this pin. Don't try to be y'all old. Don't be doing www. No, it's just Kahoot.it and put in this pin number 8119297. Put in your name, and then you can still get in. That was just question one. You got a whole night's class in question one. Let's go. It's going fast. Oh, that was question. Did I skip one? Question three. Blank are issued by corporations and governments to raise funds. What would that be?
I can't see those answers.
Say it again.
I can't see all the answers, but I'm just going to the Kahoot site now.
Okay. Can't see all the answers. Bonds. A bond is not a stock. A bond is
What's
an
that
IOU.
pin?
Huh?
What is that pin?
Oh, 811-9297. Hey, Miss Daphne Lloyd, my childhood friend. Now you know
Hey, Scott Stewart.
when the
Can you put
friends start doing business with you, you must be on something.
can you put the PIN number in the chat? Because I'm not able to write it down right now.
Yes, yes. Now I don't know if it's gonna be clickable though. That's the thing. But you might be able to highlight and paste. I don't know. But there it is. Kahoot.it, and there's the PIN number. We're moving on. A bond is an IOU. A bond is an IOU, generally issued by corporations and governments. They return small returns on bonds, but it's guaranteed money. Guaranteed money. Small return. We're not talking bonds tonight. We're just talking about stocks. Let's keep going. D-Ball got one right. Miss Karen is in the game. Investors can invest their money in a what? Of these three choices, what can investors invest their money in?
I'm in the game, but it don't show me my wording next to my choice, my symbol choice. So I don't see the wording.
You got to look at the other screen. You just looking at but look at my screen. While you looking at that one screen, you got to look at my screen too to see which one is which. Now look, let me tell you what we're not gonna do, people. Black people, just because we don't know something don't mean we're not gonna go for it. We're gonna shoot that shot anyway. You gotta guess. You gotta guess. All right. And look, you're gonna have to be okay with getting it wrong. This is part of investing. It's not investing is a sort of a gamble. It is a sort of a gamble. And you're gonna have to get comfortable with seeing that dip sometimes. Right? A lot of us, let me just discuss it because I know I can talk about this because I've been there. A lot of us respond emotionally to money. You know what it is. You get that quick bag, you get something extra, and you feel excited. Oh, baby, let's go get something to eat. Oh man, let me grab. Oh man, I can. Come on, we're gonna go ride somewhere. Let me go. You know, you just get it. But then when you don't have no money, it's like the world. Oh, woe is me. You know, we got to get past the emotional aspect of money. You are rich already. You got to be rich mentally first. And rich don't mean you go out and you flossing and you. That's not that. Rich is a mindset first, so you can get out of the emotional aspect of the money. And this ties to, oh, I don't know, so I won't ask, or I won't know, I won't go for it. Hey, even just take a guess. You might be right. You might be right. I talk to everybody like this. Let's keep going. Let's keep going. Okay.
Can you maximize your screen?
When Zuri, okay, yes, when Zuri buys shares of No Limit Food stock, he becomes a what? You buy shares of No Limit Food stock, you become a what? That's right. You become a partial owner of the company. That's what it does for you. That's what it does. You become a part owner. I just talked about it. I get to vote. All right, Miss Karen, in the game now. It's still anybody's game. Is this true or false? A public company sells its shares to the SEC, the Securities and Exchange Commission. Is that true or false? That's false. The SEC, the Securities and Exchange Commission, is the oversight body. They're the people who put people like Bernie Madoff in jail. They spot the fraud. A public company is selling its shares to investors, people, humans. They wouldn't sell their shares to the trading police. They sell their shares to people. Sometimes those peoples are those peoples. Sometimes those people are big corporations and big institutions, right? But sometimes those people are everyday common folk like you and I. So now you know what the SEC is. All right, we keep going. We're 50%. Based on the rule of 72, if you invested money and earned 20% interest, your money will double win. Uh-huh. I know y'all wasn't ready for that. I know y'all wasn't ready for that. Based on the rule of 72, if you invested your money and earned 20% interest, your money will double in what period of time? Come on, guess. Just go for it. Just guess. See how that guessing work? Now, how did you get 3 years and 7 months? See, the rule of 72 says exactly what it says. Depending on the interest rate, that's how long it's going to take for your money to double. So when you talk about if you go buy a car and they give you your interest rate, all of you have excellent credit. Your interest rate is 1 or 2%. That means that whatever that car, the cost of that car is, if you divide the interest rate by 72, that's how many years it's going to take for you to have doubled what you spent on that car if you take that long to pay it off. So if you buy a $30,000 car at 2% or whatever that rule of 72, that's how it would. If you took that amount of time to pay that car off, you would have doubled your payment. Conversely, if you find an investment tool that has a consistent level of returning interest on your money, you can also determine how long it would take for your money to double. Mhm. That's why when you look at how is the stock performing, and we're going to look at a chart tonight that's kind of towards the end. We're going to look at a couple of portfolios tonight. You'll be able to say if and that's the contingency right there. If the interest rate on this investment stays consistent, I can calculate how long it would take for my money to double. Yes,
So is that 3
compound
years and
interest.
6 months?
Say it again.
Is that 3 years and 6 months? You said you take the 20%, divide that 20% into 72?
3 years and 7 months. Like 6 point something.
Yeah, I did it. I got 3.6. I was
3
just
point.
wondering.
So it answers 3 years, 7 months. If I gave you another one and I changed the interest rate, if I said, okay, the interest rate is, so imagine that. Imagine this. Let's say you buy a car, you got poor credit, your interest rate is 20% on that car, but you got a 5-year loan. You would have doubled the amount of the payment in the car after 3 years and 7 months, but you still got 2 more years to pay on the car. But if we switch it around, if you have a Roth IRA, some mutual fund, and it's getting you 20% every year, if that stays consistent, every 3 years your investment doubles. We're gonna keep going, y'all. This the free. This the money. This the free. You know, I'm gonna give you a whole lot tonight. You're gonna know something too. If the board of directors of Amazon vote to share some of the profits with shareholders, they would have decided to do what? Mm-hmm. Yeah, they will issue those dividends, a portion of the profits that they give to shareholders. And if we're going to share some of the profits, that means they're going to pay a dividend. You got a question, Karen? No question.
No. I was just realizing what I picked based on the word dividends itself. You being paid dividends. I was just, checking my own, making changes in my head. That's all.
That's right. That's right. That's what you're here to do. That's what we do. Listen, a 15-year-old boy taught me something today. Look, we always learning. It's okay. It's all right. It's all right. And I might get something wrong tonight. Investing means what? What does it mean to invest? Yep. Thank you. Hey, look, while I might have a small bit of money in some cryptocurrency, I'm not teaching cryptocurrency. I'm not teaching Forex. I'm not teaching day trading. I'm teaching investing. Investing is a slow roll. It's not a quick sprint. My short-term window for investing is 10 years minimum. Long-term is 20 plus years, right? The idea is putting your money to work for you. It happens slow. Some of us on here, we may start with $5. If that $5 increases 10%, 50 cents. All right? Yeah. That $5 is $5,000 and increases 10%. That's $500. Let's slow roll. But it's better than me putting $500 in my closet for a year. And yeah, I can go touch the cash if I need it. Wife, you want to buy a new dress, maybe, okay, go get the cash. but it's not gaining any interest. My money could be, and I'm using the words properly, could be, because there are no guarantees in this. My money could be making more money while I'm chilling. That's investing. That's investing. Okay, let's keep going. All right, here we go. When Ellie Incorporated decides to go public, it will issue what? Yeah, okay. You all know that. Y'all don't need me to explain that. You know what that is. True or false? Zurich company decides to go public. It can choose to be listed on any of the exchanges. Yeah, nah. We got an oversight committee for that determines if you'll be listed on the NASDAQ, new vocabulary, the NYSE, or the Amex. Those are the three American stock exchanges. The Amex, the American Stock Exchange, or the American Exchange. The NYSE, the New York Stock Exchange, or the NASDAQ, the National Association of Securities Dealers Automated Quotations. Most, not all, tech stocks are traded on the NASDAQ, the only place where you can buy and sell stocks. The only other place where you can buy and sell stock is on the New York Stock Exchange. That's where the majority of companies will fall. The majority of companies will fall on the New York Stock Exchange. The Amex, the American Stock Exchange, is for new, small companies, smaller companies. Maybe some penny stock companies are on the Amex. Based on various classifications, when you file your IPO papers, the SEC will determine which exchange your company will be traded on. You only buy publicly traded companies, stock and publicly traded companies on one of these three exchanges. Now, my company, Genius Lab Incorporated, we have stock, but we're not publicly traded. You can buy stock in Genius Lab, you just won't find it on one of the three major exchanges. You have to go to the CEO of that company or whoever of that company directly. All right. Let's keep going. Mona, look at Mona. Look at Mona. I see you, Mona. In general, the blank the risk, the blank the possible return on your investment, generally speaking. Hmm. Yeah. Made you read a little bit. Yeah. Yeah. Conversely, it could be in general, the more the risk, the more the possible return on your investment. That's your risk tolerance level. Are you the type to go, jump off of a, I know Daphne ain't jumping off nothing, right? So I'm teasing Daphne, but I know you ain't jumping off no sides and no cliffs into the Atlantic Ocean, you know?
No, and I'm driving, so I'm sorry. That's why I'm not participating like I should.
No, that's okay. Yeah, that's okay. That's all right. You getting what you should. You can always go get the replay.
Hey,
You can
that's
always go
exactly
get the
what I'm
replay.
do.
Your risk tolerance. Some people will go zip line and jump out of airplanes, pyro, I don't know. They do all kind of stuff. Some of that risk, those risk factors also relate into the markets. Bet big. Risk to be a little bit more risky, for the possible return of greater later. But of course, you don't have to be risky. You can be very cautious. Just understand, you move with a little caution and you get a little reward. But if you lose, if you bet a little and you lose a little, you bet a lot, you could lose a lot. But you bet a lot, you could win a lot. That's part of the risk that you take. What does that look like in stocks? Emerging markets, new technology, cryptocurrency, Dogecoin. Ethereum. Oh, that's risky. But if you get in right now at a, you put 100. Look. Here's the story that I keep telling. In 2010, I had a chance to get Bitcoin when it was 3 cents a coin. All right, and I was on this conversation in investing. Yeah, man, you better get in on this Bitcoin. Man, I don't. What is it? They couldn't explain it. It's only 3 cents, man. Give me $100, you'll have 3,300 shares. Nah, man, get out of here. If I'd have put that $100 up at 3 cents a share, that's 3,336 coins. If I would have stayed the course, 1,333 coins at $100 today is $186 million. I needed my $100 back in 2010. No, I was like, son. So it's going to be up to you. Nobody knows what the market would do. I don't care that your uncle is the Fed chairman. Warren Buffett is your pops. Nobody knows what the market would do. Nobody knows what the market will do. Okay, let's keep going. We got a lot to cover tonight.
Which stock exchange was that on, Mr. Stewart?
Hold on.
The Bitcoin. Which one
Hold
of those?
on. Scott purchases 100 shares of Moderna for $35.50, sells it for $46.25. What's my profit? That's a little math. All right. Karen, let me go back. Let me answer your question first, and then we'll come back to how you all can think about how to calculate this problem. Karen, you don't buy Bitcoin on the stock exchange. It's not a stock. Bitcoin is a cryptocurrency. It's data mined. It's a lot of algorithms that go into solving these complex math problems, and every time they get the solution correct, it creates a coin. Or the more advances you make in solving these you program your computer to solve these complex problems, it gains and produces these digital coins. And so you have to buy a cryptocurrency on a wallet. You buy it, you get a wallet. And so some wallets some platforms that allow you to buy cryptocurrency, you could do it at Cash App allows you to buy cryptocurrency. The number one that I use is Coinbase. You could also use Robinhood to buy some cryptocurrency. Those are the three that I currently use for the crypto that I am invested in. I hope that answers your question. Let's go back to this question right here. It doesn't really matter that we're looking at 100 shares. The problem is, the question is asking, how much is it for one share, basically? What's the profit on one share? So this is buy low, sell high. Buy low, sell high. It says I purchased this stock for $35.50, and I sold it for $46.25. So what was my profit? I sold it for more than what I bought it for. And the difference between $46.25 and $35.50 is $10.75. That's for one share, but I have 100. So that equates to $1,075 gain. That was quick. If you want to catch it again, catch the replay. Catch that replay. All right. True or false? All publicly traded companies pay dividends. Just want to see if you're paying attention from earlier, if you were here. That's false, of course. That's a standard math question, a test question. Anytime you see all, be weird. All right, it doesn't matter about the ranking. We're all in the same boat trying to figure it out. But I do want to give a shout out to my young nephew, Mr. Ball. Yeah, but it ain't no competition. I'm just saying. Let's get into some more stuff.
I get a shout out too.
Can you get what now?
I thought I get a shout out too. I participated, knowing I wanted to get. I do. Especially when you use the nepotism, nephew.
Go through on the participation points. Aaron on the participation. Shout out for the participation. Thank you for doing it.
Thank you.
No, that's what's up, though. That's what's up.
Thank
Hey,
you.
look,
Thank you.
I'm bringing heat. I got heat. I got heat. I got heat. Straight heat for y'all. I'm in my Steph Curry right now, right? Um, so this is what it is. Y'all know you maybe you don't know, but I do own this company. I am the founder of Genius Lab Incorporated. Check us out at geniuslabchicago.com. I took students 4 years in a row. We won first, second, and third place. At the end of that fourth year, the organizers of the stock market game for the state of Illinois, this is when I was teaching at Gwendolyn Brooks College Prep as a high school teacher. The organizers of the game said, Mr. Stewart, will you please not participate next year because other teachers ain't winning? I was like, cool. We got it. And so I've been kind of doing my own thing with teaching it in this manner ever since. I like putting these, yeah, man, 18 awards over the years. And I actually stopped counting because at this point it's just obnoxious. But y'all like to know that. Like, what has this guy done? Who is this dude? And Daphne Lloyd will tell you, I have come a long, long, long way. But I'm on it. I'm on it. Daphne, is that true? I know you drive it. Don't worry. Just stay focused on the road, Daphne. Tonight, we're not gonna really worry about introductions. We have a lot of time. I'm gonna go over now some 9 basic investing principles. We're gonna look at the 9 investment sectors, and we're gonna analyze the chart. I'm gonna move fast. I'm not this. This ain't the advanced class. This ain't. I'm giving you got an hour to walk away to feel more confident about what it is and how it works, right? So let's just get into it first. I'm not going to do these vocabulary words, but I'm going to go ahead and go on these 9 basic principles when it comes into investing. And the first and foremost, guys, and ladies and gentlemen, is to be patient. Like I said earlier, investing is a slow roll. Slow roll. It ain't a lick. It ain't a quick come up. It's not about nobody asking you to, hit their cash out. It's not me telling you 100 times it's not a scam, because if I got to tell you 100 times it's not a scam, believe it's a scam. If I got to convince you it ain't a scam, it's a scam. You can lose money at investing. Historically, the stock market has performed favorably. Just historically, over time, the stock market performs favorably. I equate the stock market to life. The objective of your investment is to grow over time. Like when you were born, you'd like to think that you are better and stronger today than you were when you were a baby. Nevertheless, that doesn't mean that you didn't have some ups and downs and some bumps along the way. Your stock will perform the same. There will be ups and there will be downs. The question when it comes to your investment portfolio is, how high will it go? And how long will it stay high? And how low will it go? And how long will it stay low? But if you will be patient, you should see, if you're investing in a solid company or companies, you should see growth over time. So please be patient. The objective is to buy low, sell high. You do not want to wait until, they're talking about GameStop on the news and a bunch of people got rich. And now you're like, yo, let me get in on this GameStop. Like, it's too late. And it's not that it's too late to invest. It's just like when they say it's too late, it's just like now's not the right time. Just go back to point number 1. Be patient. Let the price come down a little. So what happens, and we'll see this when we look at a chart in just a few minutes. Stocks, because just like you grow, like you hit a birthday and that's a new high. You've never been 12 years old before. So you hit 12 and then you have bumps in the road, ups and downs along the 12 until you turn 13. And that's another new high. And then you could have some more ups and downs, and then eventually you're 14. My point in this is when it hits the new high, anticipate there'll be some dip as it journeys to the next new high. So when a stock hits a high, that's not the time to buy. Just let it, let it acclimate for a minute. Let it settle for a minute. Let it come down. Get it when it's low and sell it for more than what you paid for it. Now, you could buy it at the high and just ride it out and wait for the next high because it eventually, as history has shown us, will generally increase above its previous high. I'm gonna stop right there because I don't want to make this any more complicated than what I'm trying. It's like just understand that principle. When you buy a stock, try to buy it when it's at its lowest price, and then you know you can sell it and make money on it when you sell it for more than what you paid for it. That's the concept behind buy low, sell high. As a matter of fact, this next principle is buy the dip. So I own some stock right now. I own some. It's called Sundial. Sundial is a cannabis stock, right? And Sundial is a new stock, and the cannabis market is an emerging market. It's brand new. It's the cryptocurrency of the investing, right? It's brand new. It's not federally mandated. So a lot of the companies that are trading on the US exchanges are Canadian companies. It's not even, you can't even be an American company and have a cannabis stock right now. So it's super weird. So I'm in, and I bought this one stock at like, 90 cents, and it got up to like $3.29, right? Um, and so, you got $100 in there, 90 cents, you got like, what did I pay? Like 100 shares to almost, right? So it goes up to $3, it's $3,000. And I'm like, cool. It's expected to get to $20, right? But it got to 329 and then it started to tumble. It had never been at 329. It went down to 84. Now, mind you, I paid 90 for it. It dips to 84. Most people are like, oh, shit, I'm not, yeah, I lost my money. No, buy low, sell high. Be patient. Buy the dip. It's low. It's on sale. It's cheaper than what you pay for. Get some more. If you can, only if you can. If you don't have the money to lose, because it is a little bit of gamble here, you don't have to do it. It's just an investing principle or strategy that you might buy the dip. When it goes lower than what you anticipated or what you purchased it, there's an opportunity for you to buy more. I like Nike. If I find out Nike's got an 80% or 90% sale, I'm gonna do everything I can to buy me a pair of gym shoes if they got them for me, right? It's the same principle, right? So keep that in mind. If you buy a stock and you lose a little money in any period of time, don't panic. Be patient. Remember, this particular stock is expected to get to $20. Will it be a year or will it be 10 years? No one knows. Will it get to $20? We don't know. We don't know. But through some analysis and some understanding of the history of the market, we try our best to make educated guesses. And that goes into consider the long term. This ain't a short person, and I don't mean not a short person game. This ain't a short played game. We're not doing day trading. This ain't the blips and the flips and the blops and cyclops on the charts. No. Buy it and hold on. Be patient with the money. In my world, I'm teaching everybody and when I'm thinking long term, the minimum long term is 10 years. Hold on for 10 years minimum. Long term, 20 years plus. Oh, you've been at it. Oh, you've been at it for a minute. And I'm going to show you why in a second. Remember, what goes up can come down and what goes down can come up, right? Avoid investing what you aren't willing to lose, right? Do not do this if you're trying to come up, like you need that, you need to get these wheels, you need to get some new tires for your car. Let me throw some money at the stocks. Nope. You're trying to get some money for a vacation. Let me invest in these stocks. Nope. 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 None of that. We're not on that. This is, if you have ever been in a position where you're like, all my bills are paid, I'm good, everything's straight. What to do with this $100? What to do with this $1,000? And it would just literally sit in your account, and you would eat it at Red Lobster or drink it at. That's the money you should be thinking about. Maybe I should put it in one of these investment tools. And finally, of the 9 basic investing principles, no one knows what the market will do. No one knows what the market will do. Okay. So just to recap real quick, of the 9 basic investing principles: be patient. Oh, that's the one we didn't, we skipped over. Research the companies you're investing in. Make sure you do your research. Buy and hold, long-term investing. Buy low, sell high. Buy the dip. What goes up can come down, and vice versa. What goes down can come up. Avoid investing what you ain't willing to lose, and no one knows what the market will do. What I want to do now is I want to look at a chart, if that's okay, as we approach kind of the end of our session. And I'm leaving time for a Q&A as well. And I'll do my best to answer the questions. And if I can't answer it, I'll tell you, hey, I don't have that answer because I don't know everything. I just come off just like that sometimes. So a company that I want to look at is another company that I had a chance to invest in. And y'all all are old enough to appreciate this story. Netflix. This is a chart. So before I get into the story, let me tell you what I do. Anytime I'm looking at a company and I want to know, and let's say, Karen just said, hey, Mr. Stewart, you should go invest in Netflix. I hear they're supposed to be the future. And I'm like, okay, cool. Let me pretend I've never heard of Netflix. This is what I do every single time. Just follow me. You'll have to go back and watch the replay. I'm about to give you my mind right now. And I'm gonna this is how I talk to myself. I'm like, let me go check out the max. Okay, boom. They've been on trading since May 24th, 2002. So they're about 19 years old. They were $1.21 a share when they made the initial public offering. Today they're up 41,000% in 19 years. Man, $100, man, that's 100 shares. That's 100 shares. Is that right? Is that right? Is that $50,000 off 100 in 19 years? Man, what they've been doing in the last 5 years. Wow. 5 years ago, they were $90 a share. They're up 462%. In the last year, so since 2020, okay, they up 23% about 23%. Somewhere up in here, boom, okay. 411, it's now 506, that's cool. Since January, year to date, they're down 3%. That's not bad. In the last 6 months, they're up 0.46%. In the last month, they're down 1.5. Then the last week, they're down another 1, almost 1.5, almost. But today they had a good day. They're up 19%. I'm gonna go look at the market cap. The market cap tells me how valuable the company is today. So this is a $224 billion company. Okay, wow. All right, cool. I'm not so concerned about volume or PE ratio. That's an advanced class. We can break that down. It requires a little bit more math, so you got to come ready to do that math. I'm also looking at the year range, the low and the high. In the last year, this stock has been as low as $393. and then it's been as high as $593. That's the new birth year. That's the new high. That's the historic high for this company in the last year. That's what we're looking at. So in the history, has it been more? Has this stock been more than $593 in the history? It doesn't really look like it. It looks like that 1 year high is also a company historic high. So I'm anticipating every time that a good company will exceed its previous historic high. So where is it at? 506? Okay, yeah, but Stu, it's been down for the last month. It's been down for the okay, I'm not tripping. People have bad days. You could have a bad week. You could have a bad month. Historically, how are you doing? This stock historically is up 41,000%. Even in the last 5 years, Stu, it's up 460%. In the last year, it's up 22%. Come on, where you gonna get 22% on your money, right? All right. Since January, it's been down 3%. Okay, cool, cool. Why? Now I got to get into the why. Now I want to know the why. That's the research part, because that wasn't enough. And you're really gonna have to go back and like watch that video and understand what I just did and how I did and why I'm talking to myself that way about it. But I do want to know why is it down in the last month or so? What's happening at this company? Another question I ask myself is, what's Netflix gonna be on in 20 years? Okay, that's a little too far out, but I do think about it. I sometimes go deep with it. Where's Netflix in 10 years? Will it be as relevant? Will Hulu take over? Can Netflix withstand the course of time? Or will Netflix be blockbustered? Right? So that's how I look at these charts. And I would do it the same way for any company. Now, I don't own Netflix stock, but I am kicking myself because, again, around that same time, they was talking about it. That same time I was talking about that doggone Bitcoin, I didn't have $100 to put in. Right up in here, $10 a share. Somewhere up in here, I could have got in. $100, 10 shares. 10 shares of $100 is still 5,000 a day. 19 years, is it worth it? Is it worth it? If I was living, you go to your parents' house, the house that you were raised in, you go to your old room, you found $5 from when you was a kid that you didn't know was in there, and you get it today, and it's wrinkled up, ain't been touched in 20 years, ain't been, but it's wrinkled and it's dusty, and it's still just $5. But if you would have gone and put that $5 into something that has a interest rate of 41,000%, how long does it take for that money to double? The rule of 72. Uh-huh. Months, a few weeks, if this rate stays consistent. If the money consistently grows at this rate, your money doubling every few days. So, what are we talking about when we look at charts and stocks? There's one term that I want you to think about when you invest, when you think about investing. It's not about investing in a bunch of different companies. We're coming on the end, and then this is my last point, and then I'll leave the last few minutes for Q&A. It's not about having a bunch of different stocks. It's about diversifying your portfolio and having a bunch of different stocks from different sectors. That's where the diversification comes in. And so there are 9 investing sectors where generally all companies fall into one of these sectors. Energy, raw material, you can read it for me. So if you think about investing, don't just have a bunch of tech stocks, although you could. Don't just have a bunch of consumer goods stocks, although you could. Don't put all of your eggs in one basket, although you could. But mix it up a bit. Think about businesses in these different sectors or industries. All right. So now I want to leave it open for Q&A. You might have a bunch of questions. Hopefully I can answer some, and if I can, I'll let you know.
So this is Daphne. Hello, everyone. Can you hear me, Scott?
Hello, hello. Yep, we can hear you.
And I may have missed this, although I was only 7 minutes late. So you covered a lot in that 7 minutes. Where do you get started?
Excellent question. So, you start by looking around wherever you are right at this moment. So you're in your car. What kind of car are you driving?
A Hyundai, Elantra.
You want to find out if Hyundai is a publicly traded company. Where did you eat today?
At home.
Where did you get your groceries?
Meyer,
Is Myers a publicly traded company? Where did you buy gas?
Shell,
Is that a publicly traded company? What kind of shoes do you have on? What kind of coat? Where do you shop? Have you been to Amazon? Are you watching Netflix? Are you watching Hulu? Are you watching Netflix and Hulu? What kind of computer do you use? What kind of water do you drink? What kind of toothpaste do you use? Soap and deodorant. Look at the back of those labels and see if it says Johnson and Johnson or Colgate Palmolive. You always buy the same brand. Companies like that, like a Colgate Palmolive, they do liquid detergent. You probably buy all of that. So I always suggest people start with where you're already giving the people the money, because at least you support them, and if you support them, other people are supporting, and probably a solid company, probably a good safe company, probably a strong company. That's where you start. What kind of shoes? I stay with Nike, so I better buy some Nike stock. My son loves Taco Bell. Well, we did the math. We go to look, can you buy Taco Bell? Taco Bell's not a publicly traded company. Where you got to keep looking. Don't stop there. You find out that Taco Bell is owned by Yum Brands, and they own Taco Bell, KFC, and Habitat Grill. It's like, oh, and Pizza Hut. I was like, oh yeah, we could buy Yum Brands then. Right? So that's where we start, Daphne. Just start with what's already around you that you're comfortable in. Look, everybody should own a piece of Amazon. And I shouldn't say that. I'm not giving advice. I'm just talking freely. Because also when I think about Amazon, I think about Amazon in the next 10 and 20 years. Like, it's hard for me to see imagine Amazon going under in the next 10 years. It's just hard for me to imagine that. I could be wrong, but I think Amazon is good for the next 10 years minimum. I hope that answers your question.
yes, that was good. And on another note, I just ordered the Manifest Journal Manifestation, so I want an autograph.
Oh man, absolutely. I'll be tan through mine. And look, I was gonna post this, but I just want to say, this, Daphne. If manifesting works. That's all I'm gonna say. Trust and believe, it works. So, thank you for support.
What is
I have a question,
manifestation?
I think I heard Mona first.
Yeah. Because I'm gonna continue on with what she was saying, the person before.
Okay, come on, Mona.
I was gonna ask, right? So we hear the term buy low and sell high all the time, right? But how do you know what is low? You know what I'm saying? Like, you brought up the example where years ago when Bitcoin was 13 cents or whatever, what have you. But like, outside of that, how do you know if something is low? You know what I mean?
Yeah, I do. So let's look at Tesla, another popular company. Um, so what I'm looking at,
Google
this is what
Finance.
hmm? This is what I'm
No,
looking
I
at
see
when
Google Finance there. No, go ahead. I'm sorry. I was just saying I see Google Finance. That's what you're looking at.
yes, I use Google Finance, yes. So what I look at is I'm looking at what has been I'm looking at the historical high. One thing that I'm looking at. And I see, for example, with Tesla, in the last year, Tesla has been as low as $136.61, but it's been as high as $900.40 a share. And then what I'm looking at is where is it today? Because there's not, and I want to look at it max. I want to see, has it been more than 900 in its history? And it looks like the 900 is its new historical high. I hope you following me. Let me start over. Your question is, how do I know when it's low? When is it low? When it's below the historical high. Because the objective is, the anticipation is, the stock is always going to exceed its historical high. It's just a matter of when. It's just a matter of when. So we expect Tesla to rise above $900 again. Tesla is supposed to get to $1,000 by the end of the year. So you also have to be careful of who you listen to when you're listening to, your Motley Fools or your Reddits or your Wall Street Bets or whoever you're listening to. You have to discern, and that comes with practice too. But you have to discern the information. So some people anticipate Tesla to get to $1,000 by the end of the year, right? Well, Tesla has hit $900. It's only April 28th, and it's already flirted with $900. So to me, right now, Tesla is low. What makes it low? One, uh, investors have already predicted a stock price that I feel like is attainable. And two, it's lower than its most recent historical high. And we anticipate the stock at some point to exceed its recent historical high. The question is when. So I would buy Tesla. I mean, I'm not, I take that back. On record, I take that back. I am not suggesting buying Tesla. I am not suggesting buying Tesla at all. We have bought some Tesla stock. And I also want to tell this. So when I say, and make sure these people out here, because everybody won't tell you this. Everybody's talking about investing. They make it sound like they rich. I don't own a full share of Tesla at all. One share of Tesla is $694. I don't have $694 to gamble with. Okay. I ain't on that yet. Right. But luckily, there are some technologies that allow me to play the fractional stock share game. So I can buy a fraction of the share of stock. And if you want to know what that means, it just means, oh, wow, I didn't realize we were over time. What that means is, if I got $10, I can buy $10 worth of Tesla stock. I receive the same fractional increases and decreases as the full stock price, though. I'll go maybe 4 or 5 more minutes, and then because it's late for all of us. So what that means is, if Tesla goes up 5%, my little $10 goes up 5%. If Tesla goes down 1%, my little $10 go down 1%. So did that answer your question, Mona?
Yes, it definitely did. And some. Thank you.
Good. Karen, I think you. I feel like
Uh,
Darnell has a question too. Karen, you have a question?
yeah, mine was kind of like a repeat. You said something about you buy currency on I know you said Coinbase, Robinhood, and a third one. And then I want to ask what was manifestation. That was it for me.
So the platforms that I use and that I'll use and I'll speak up, and nobody is paying me to advertise their platform, but I use Robinhood for stocks and for some crypto. I use Coinbase because they only do it's a cryptocurrency wallet, so they only trade cryptocurrencies on Coinbase. I also use a very traditional method. I use a TD Ameritrade. I do as well because it's very um, uh, what's the term that I'm looking for? Man, it's just like traditional. It's very traditional. They really take you through all the paperwork. You assign your beneficiaries and things like that. And then I use Cash App for some stock and some cryptocurrency investing. The other platform that I don't use is Stash. I use the Stash app. You can start investing for as little as $5. And the manifestation journal. So I'm a huge believer in what you think about, you bring about. I'm a huge believer in the law of attraction. And I'm a huge believer in working through things that block us in our minds from achieving what we want to achieve. And manifesting helps me to remove those blockages and attract and receive what I ask for. So I have a journal for writing down your manifestations daily, and you can cop that at on Amazon. I'll send you a link in an email, and please feel free to go buy your own copy of the manifestation journal.
Thank you very much.
Thank you. Darnell, you got one?
What's my cut for that free advertising?
Thank you, Lord. Appreciate that. I owe you some.
I'm just playing.
Hey,
Yep.
hey, I got a situation that kind of covers like all nine of these principles. Well, not all of them, but some of them. And just want to let me know what you think. So, I'm on Robinhood too, and I had one particular stock that I was given. When somebody used my link or whatever. So it's called Plug Power.
Oh yeah, I'm familiar.
So, when I got it, it was like four. It was 475 when I got it, and of course, somebody told me, like, man, you need to buy a bunch of those, buy a bunch of them. I'm like, I don't even know what plug power is. It was just given to me, blah, blah, blah. This was back in July, last July. And so then I stopped following it for a while. I even took the app off my phone. And like around October, I got back on it. It was $75. I'm like, damn. Okay, so that's the high. But now we're talking about the dip. So like it's been dipping slowly for like the past few months. But like the last month or so, it's been going up gradually, like a dollar here, 50 cents here, whatever. So like now it sits at 28.86 as you see. And so I'm sitting here wondering, like, would that be buying the dip? Like, should I think about possibly buying some more in the dip, expecting that, you know what, it might get back to that $75 again over time?
Yeah. So again, I no stock advice. I'm a stock doctor. I am not licensed to give advice about particular stocks and whether or not I should be investing in that particular stock. So that's my disclaimer. But I'll tell you how I look at it. I'm expecting my business to grow over time. Plug Power fell off. Plug Power scares me. Plug Power is that family member that be tweaking. They never fully bloom. They was on their way, and then they fell off and never got back on that horse. Plug power, I fell for it, me personally. I got on it about a year ago and got on right up in here. No, no, that's not true. That's not true. I think I got on plug around this time last year. Yeah, because I'm looking for June. Like June. Got on up in here last year. And then it did all of that. And it's been down for me ever since. I'm in a similar boat. I'm still holding on to it. Now, this is super advanced because now we get into some other strategies when you start to look at the portfolio. Okay. And this is what we'll get into. If y'all really want to go there and really dig in, if y'all really want to go there and dig in, this is where you start to practice. This is where I give you the $100,000 and we practice, right? So if we go look at the portfolio, what else is in the, I don't want to do this one. What else is in my portfolio? And then I may say, okay, I may remove this one stock from my portfolio that's bringing me down. There's my sundial. I may take it out. I may accept the $3,000 loss now, put that cash back into my bank account, right? And then find something else to invest in later. So now what you're talking about is, what's the strategy? What you shooting for? What you aiming for? You know what I mean? Like, why are you here? What are you doing? And without that, it's just like driving without no destination, right? I mean, and there's no skin off your back. You were given the stock. So it's like, what? But then we start to the more advanced stuff, we spend a little more time like, why are you investing? What's the goal? What's the goal? What are you trying to accomplish? And you put a little more thought into that. Do you, again, I honestly, you don't even like to say, what plug gonna be in 10 years? You never know. We never know. Plug has been on the market since the Max company is since 98. So they're like, what, 27 years old, 27 years old. 27, they just hitting that 20 plus mark. Plug power could blow up. I don't know what the next 10. So I now, okay, so, okay, they're an energy stock. Now I got to get into the research. Last days for people acting in the class action. I don't know what they're talking about. The stock outperformed the market on a strong trading. Okay, cool. So that's yeah. What this means is analysts had a projection for Plug Power, and Plug Power exceeded that projection. They outperformed the market on a strong trading. So I would have to look. Here we go. Plug Power could disappoint investors. This is where you got to do your research. You got to read, find out what people are saying. But don't just take because everybody has an agenda. Everybody has an agenda. So you have to figure out who's real and whose opinion and expertise you're going to listen to, and then make your own decisions from there. Was I able to answer that question for you, brother?
Yes, you did. Yes.
That's all I got for you, people.